JB Cycles with update on November 19th. So we have rallied up towards the falling trend line and the 200-day moving average. And here in red I have my 7-year cycle, and it is suggesting 5 moves down. That's actually the 20-week cycle we see within the 7-year cycle. But we don't necessarily have to continue this bear market all the way down. Sometimes the bear market ends earlier. However, I still don't think this is over. So we have a trend line, we are broken below, and now we are above. We are chopping around in this pain area that I call it, where anything can happen. But let's look over here. I have weekly data, and this is a MACD, I think, with 40 and 5 weeks averages. So here's a pattern. You see, we are oversold once, twice, and we rally. Okay, let's look back. You don't see this pattern going very long back in time here, but unfortunately we don't see the dates here. But anyway, this is the 70s. You see 1, 2 times oversold, tries to rally to the 200-day moving average, fails, and capitulation. 1, 2, tries to rally to or goes to the 200-day moving average, and capitulation. We are, well, over here, that's 1980. Oversold once, twice, goes up to the 200-day moving average, capitulation. But this time we really didn't capitulate. It was more a bottom formation. And these bear markets, we don't have them so often, so not much to find in historical data. But we have year 2000, oversold once, twice, and this time we had a big, long-lasting rally. We broke the falling trend line, we went above the 200-day moving average, but still we got the capitulation. So not always are these patterns ideal. We have some variations within it. And 2008, oversold once, twice, and tried to rally up to the 200-day moving average, but failed, and capitulation. So all these were similar, but then we have a different one in 15-16. Oversold once, twice, and this time we managed to we succeeded in rallying and breaking up. But this time it was hardly any bear market. The 200-day moving average is mostly flat, no real downtrend. So this one sticks out. It managed to stop the bear market after 2 down legs, but it was no real downtrend. This time, however, we do have a real downtrend, and we have went down once, twice, and now we are close to the 200-day moving average. So we have several examples where this is where we get the capitulation, unless we are in like 2015-16. So we are, let's see, we are struggling with half cycle offset, the half of the 3.5-year cycle. So this is about a 21-month offset, or 90 weeks. So there's really 2 things we can do here. Either we break up and rally and everything is fine, or we get the capitulation. And as we saw in the 1980, we really didn't capitulate much, but we did get one final move down. But we could really capitulate here. So my pattern recognition shows, you know, A, B, C, and this C move down can have some sub waves within it, and you know, that's my scenario. We should soon turn down here, but you know, we could theoretically go sideways into New Year here and then turn down. So you know, a lot could happen here, but yeah, we could go choppy sideways here. That would be allowed. Another one looks very similar, and the third one also looks very similar. So we are within this pattern. But you know, if we start to climb up here, we would start to break that pattern. You know, my cycles have not been working. This low was very early to be a 20-week low, but what we have started now looks like a 20-week cycle or 20-week oscillation. Also, we are rallying up where my 10-week cycle has a low. You know, this 10-week cycle is also neither working well, and my 4-week cycle neither working well. This wavelet corresponds with the 4-week cycle, and here we had a shortened oscillation, and now we are into a new rhythm. I have drawn it here, and it's not similar neither to the new or to the old 4-week cycle. So it could suggest we have a couple more days of upside, and then the cycle turns down. So when the cycles don't work, I turn to, say, wavelets and other indicators. This wavelet wants to go down, but you know, if I look at here, my momentum indicator, it has topped out, so it suggests I may start looking for a high. But you know, it doesn't have to happen immediately. We could go sideways here for a while. So when looking at some indexes, you know, Dow Industrial a week ago, you know, we had too much momentum. We needed to see some sideways action before we could get some setup for downside, and now we are there. But you know, we could still go up here a couple of days. Nasdaq, different pattern. You know, we're not about to break any trend line here, but overall a weaker index. We're looking for symmetry. You know, we could have a couple of days up here. Other sectors, discretionary sideways, communication bearish, technology, you know, looks like it's accelerating, but overall weak. Industrials like Dow Jones, you know, here we could break down soon. Materials, accelerating, energy, about to roll over. Staples, you know, could break down here soon. Healthcare, about to break. Utilities could soon break. Financials also vulnerable. So when looking at hourly data, my wavelet here could suggest 2 more days. Strangely, I think every weekend it looks like Monday, Tuesday could be up, and then we could have a downswing. So you know, this swing is about 5-6 days long, and we are locked into that pattern every weekend. Yeah, it looks like Monday, Tuesday up, and then we could go down. So I would like to see some sabotage here. That meaning not going straight up Monday, Tuesday, but some gaps down, or you know, more sideways action, and then perhaps on Tuesday, Wednesday we have a setup for a downswing. So you know, this bear market rally, it could go on for a little while. On average, it could go on several weeks, but some bear market rallies are shorter. So I don't know, but looks like we have a sell setup in a couple of days. See ya.